Hey everybody, it is Monday night here at the Northwest Houston office of WSB WFG. All right, so I had somebody come in today, and I heard them giving a presentation about the importance of insurance. So I'm thinking they used to be an agent, right? They didn't, they weren't, they just had life experience, right? And I sat with them today, and I asked them about insurance, and they said they got rid of all their life insurance because they're going to step over the grave. And I went, oh, okay. Well, let me ask you something. Do you know if you had $1 and it doubled every day? You had $1 today. Tuesday you got $2. Wednesday you got $4. Thursday you got $8. Friday you got 16. Saturday you got 32. Sunday you got 64. Do you know how long it would take you to get to $1 million? They didn't know. So I told them 20 days. In 20 days, you would have $1,046,000. And they're like, you don't have an insurance policy that'll do that. I'm like, no, I didn't say we did. All right. But if you took into account taxation every time that money doubled at 25%, do you know how much you'd have after that 20 days after taxes? They didn't know. Well, I've done the math. They would have had $26,000 after those 20 days. Okay. So do you think there's a good reason that you may want to find ways to keep from paying so much in taxes? Of course, they said yes, right? Especially because the government's not going to do with their money what they want to do with their money. Okay, so there's something called the IRS code 7702 alpha, which allows your money to grow tax deferred, so it's going to grow faster. And when you take that money out, it's tax advantaged, all right? And that law it's been challenged 12 times, and they always upheld it, all right? That's forever going to stay, right? So when you're looking at, your money, like when I talk to young people, right? Young guys, they're not married, they don't have kids, like life insurance. Who am I going to insure? My mom? But when I explain to them what it can do, talk about the ability, they call it the individual banking strategies, right? Where you can borrow from your policy for another opportunity. Like my son's very handy. He used to do home remodeling in San Diego, did maritime construction in Pensacola. Now he's doing HVAC and electrical back in San Diego. If he finds a property in distress, they're in default, they're getting divorced, whatever, he can borrow from his policy and pay down payment, closing costs, and fix that property, flip it, put the money back into his policy, and go look for another one. I got him a $250,000 index universal life. His meds came back preferred elite, the highest level you can get. I was proud of him, right? His target premium is $168.13 a month, but he can max fund it to $1,066 a month. That's almost twice as much as a Roth IRA, taxed the same, but he doesn't have to wait till he's 59 and a half to get that money. He can get up to 90% in an awash loan. Okay, so that's how you get tax advantage money in retirement. Let's say your money grew to $1 million in your policy, and now you want to retire, and you want $60,000 a year. Just using that number because it makes the numbers easy, right? Tax-free money. The insurance company will take $5,000 out of your policy, and they'll credit you 2.3%. Then they put it in the general fund of the insurance company. When they pay you out as a policy loan, charging you 2.3%. So it's a wash, right? But that's how you get tax-free money, tax advantage money, all right, in retirement. That's the loophole, okay? So that's the advantages of life insurance, more than just the tax-free death benefit to your heirs or your children. Okay. So, you know, there's more to it than most people understand and most people know. That's why we do the financial education. All right, I hope this helps. If it does, go ahead and share.